Welcome everyone again. Now we come to our first speaker is Ms. Verna. She is the head of GRI Greater China Regional Hub. She is an experienced sustainability and investment management professional. Her knowledge and exposure in capital market equip her to interpret ESG disclosure from the investor perspective. GRI help business and government worldwide understand and communicate the impact on critical sustainability issues. When representing GRI in this region, seeks continuing collaboration with policymakers to further advance global sustainability agenda. Verna is a CFA charter holder. Let us welcome Verna. I pass the mic to you.
Thank you so much. Good afternoon, everyone. So I hope you are all having a great week so far. And I'd like to express my appreciation to Hong Kong Green Council for inviting us today and share our perspectives. My name is Verna Ling, as introduced, and I'm representing GRI in Greater China Regional Hub. So let me just go to the next slide. And today in my session, I am gonna share a little bit about, the relationship between business and climate change. And then I'm gonna talk about how we report on climate change and some subsequent topics. Then I will reserve a little bit of time to provide you some updates on GRI and the GRI standards. So what exactly is the relationship between business and climate change? First of all, when we are talking about the business, we are referred to not just the company itself, but also the other entities. They are part of the company's value chain, and that include suppliers and also include like product users, etc. And so the company, and if you look at this chart from the up right, so the company and the relevant entities, they perform activities. And these activities, usually, they will generate impacts that are related to climate change, such as greenhouse gas emissions. And those those emissions that would cause increase of temperature, obviously. So they would generate an impact on natural. We move on to down there. They would generate impact on natural and human system. So in subsequence, those impacts would also in return affect companies, have a direct or indirect effect on companies' capital or operational investment extra, and increase their operational cost, for example. So it is very important and very critical for us to understand, because to be honest, a lot of people in this market, including some part of the investment communities, they actually confused the direction of impact we are talking about of the climate change. And when you are producing so-called sustainability report, what you are communicate with your stakeholders are the direct or indirect, positive or negative impact of your company and your entities in your value chain toward climate change. So it's the arrow on the upright. Okay, so this is a fundamental basis for us to talk about the next slides. And now, if we look at, if we're looking at two business examples, this case study is related to the automatic sector, and this instance was taken place in 2015. In this case, the starting cost was that the company sold cars with a defeat device to cheat emissions tests. So in fact, the cars were emitting nitrogen oxide almost 40 times higher than the permitted US limit, which in turn that creates significant negative impact on climate change. And the result was they also caused transition risk, reputational risk, liability, and pure financial risk to the company itself. So this example gives us illustrate a perfect case study for climate change and a business. And the next one, we are looking at another example that is in banking sector. So there's this particular bank, so they provide loans and they invest in companies operating in oil and gas sector. And so these oil and gas companies, as part of the bank's portfolio, right? They generate significant impact on the environment. So basically they produce emissions during extraction, during the product or use of the products. So basically to the bank itself, because they have this business relationship with all those oil and gas companies, they provide loans or they invest in them. So basically the bank actually contributes directly and negatively to those impacts through its business relationships. So both cases, it's they are perfect examples to illustrate how's the relationship between business and climate change. And so far, what have been done to address the risk, like take governments responding, for instance, there's this EU Green Deal that aims to reducing the greenhouse gases emission by at least like half by 2030, and then they wanted to reach carbon neutral by 2050. There's also China pledged to become climate neutral, and there's this US president's commitment. So basically, there are a lot of things that have to be done in the next 30 years. How about business? So including large asset owners, there are major companies as well. And there are some banks in some high-profile summits. They also give their commitment to reduce climate change and carbon emission. So this is just to give a little bit example of how governments and business, they are trying to do their parts. And that takes us to the next section that we are talking about today. It's so what and how we are going to report on climate change. It's never about report. So report itself, it's a great way. It's a first step to disclose your impact. It's also a great way to communicate with your stakeholders, including your employees, your client, or all your business, all those people who have business relationship with you, right? So it's never about reporting. It's about communication, and it's about the company's commitment. And firstly, we wanted to examine some challenges that are related to report, and some are sort of created because of the pandemic. The main challenge from the past 2 years would be because of the pandemic. So it makes collecting data even more difficult, right? And it also caused some delays in some reporting procedures, and that consequently have some effects on executing companies' strategies. But then because of the pandemic, some companies actually see this as an opportunity to have a green recovery. But besides the pandemics, basically, there is a lack of context from a lot of companies to disclose the emissions in the atmosphere, for instance. And there's also a systematic risk on subsequent topics. such as biodiversity loss, which we very often ignore or forgot that is actually relevant. But the biggest challenge on reporting still relies on the challenge of how you collect the data and compare and calculate. And so this slides here, basically that tells us how important it is to do the report, because disclose your negative or positive, direct or indirect impact on climate change. It will be the first step towards how we combat climate change. So in this slide, we're going to spend a little bit time on the following two slides. Remember what we mentioned earlier? The slides illustrate the relationship between business and climate change. Some of you here, you might already heard the term double materiality, but some of you might, understand or heard about the term for the first time. And simply put, if you look at the slides, simply put, there are two materialities. On the right-hand side, there's impacts. There's companies' impact toward the environment and toward the society, and that is so-called impact materiality. And then you move to the left-hand side. There's this environmental and social impact from the environmental and social impact due the impact to companies' financial statement, and that is called financial materiality. What I'm going to explain a little bit more in detail is in this slide here that provides you an overview of current international frameworks. So basically, if you look at on the left-hand side, financial reporting, including the IFRS foundations, IFRS accounting framework, including SASB as well as IRC, which they are already merged as the value foundation, also include TCFD. All of these international frameworks, they're talking about financial materiality, right? So basically what they are evaluating is they look at companies' financial opportunities and risk caused by the climate change. While the GRI standard, which is, if we look at the right-hand side, GRI standard are looking at companies, again, direct and indirect, positive or negative impacts. What is your contribution toward climate change? So that's GRI standards 4. And that's for when we are talking about sustainability reporting, you are actually talking about adopting the GRI standard to write to disclose your company's impact. What is very important here is we are not saying one of them is more important. What we are saying is both of them are equally important. But as a first start, you need to assess your company's impact toward environment, toward climate change. And then you can look at what climate change's impact are due to your financial report. That is double materiality. And move on. So how do you report, say, carbon emission? There's one observation here. So greenhouse gas emissions are actually reported more consistently than other environmental topics, right? It's because it's numbers, but it also has some variations because there are different ways to calculate the carbon emission. So the recommendation would be, company, you should emphasize on reporting greenhouse gas emissions in the whole value chain instead of just yourself. And while doing so, you also need to report on the methods you adopt to convey the energy use or direct greenhouse emissions. And in terms of what is the relevant GRI standards? What we mentioned earlier, so GRI standard, we are disclosing the impacts from the company toward the environment, for instance. So we don't specifically provide standards to address the effects of climate change due to the company. So we look at our impact, but there are a couple of GRI standards that could help you address or report the risk and opportunities that were posed by climate change. So they include GRI 102 and GRI 201. So in general disclosure and GRI 201 in economic performance, your company could disclose the impact. What's the impact of your company? What's the risk and opportunity the company received from climate change? So this is just the mention that is some disclosure you can use to address the risk and the opportunities. And so for topic-specific disclosures, so basically both GRI 302 energy and GRI 305 emissions, they basically contains the disclosures that specifically address climate change impacts of the company's value chain. And in 302 energies, there are, disclosure 302 it's energy consumption outside the organization. So you need to also disclose like those entities in your value chain of their energy consumption. And there's 302-5 reductions in energy requirements of products and services. So this is directly related to your report on carbon emissions, adopting the GRI standards. And if we look at these slides, so what does it mean when we talk about move beyond carbon? Because we are already aware that climate change is much more than just carbon emission. So if you look at this map, on the left-hand side, there's a lot of different colors. And all of this, each dot represent a relevant interconnectedness of climate change. So for instance, like those green ones, right? Those green ones represent those issues that were affected mostly from climate change, caused by climate change, such as there's like natural resource constraints, and then there's like natural disasters, right? Others, including human rights, they might be effective. Biodiversity, they are also being affected because of climate change. So basically, what Beyond Carbon is, they take us to here is those following GRI standards that would help companies to report on not just carbon emissions, but other relevant topics such as economic performance, such as water that is environmental relevance, and also occupational health and safety, because those workers, they might be like if workers work outside a building, they might be affected by the climate issue, by the natural disaster, for instance. So it's all relevant and it's beyond just carbon emission. And there's also indirect economic impacts. There's also a very important one, it's biodiversity. And there's also about your company's impact on local communities. So the following two slides is just a two case study of how the companies report on not just carbon emission, but the overall climate change impact, right? And I wanted to address here, like as GRI, we do not evaluate the quality of the report. So this is to provide some relevant cases for you to take a look of other companies' sustainability report. And Green Council would share with you the slides so you can take a look afterwards. Okay, so above is some relevant GRI standards that are related to climate change disclosure. How many times do I have? You know? Yeah, so I thought it might be a very good opportunity today to also give you, our participants a little bit update of GRI standard and GRI and the GRI standards. So this is the system of GRI standard, which you probably a lot of you are all familiar with. So you start with universal standards, you then do the materiality assessment, then you identify some of the topic standards that are material to your company's impact, right? And so in the past more than 1 year, actually, our standards team have been spent a lot of time on updating the universal standard. And the reason why they wanted to update the universal standard is because since GRI standard was launched in 2016, time has changed and a lot of things are also evolved. So there's a need for our standards team to periodically review and update the standards. So this represents a very fundamental change that would have also some impact on other topic related GRI standard. And just as this Tuesday, we've already have the global launch of the new Universal Standard 2021. Okay, so this slide just to show you how, what is the timeline of our internal internal teams. And we also follow obviously we follow the due diligence, and we also have a global sustainability standard board to approve all the final standards. So I think most of you might receive the information, or you could just go to GRI's website to download the new standard itself. So basically, we will have a foundation 2021, GRI 2 is general disclosure 2021, and GRI 3 is material topics 2021. And that reflects some, like for instance, they reflect the due diligence expectations for sustainability impact that include on human rights, okay? And it's more aligned with UN and OECD's guidelines. So this version would come into effect for reporting from 1st of January 2023. So it gave us around roughly 2 years to prepare. And we will also, in the meantime, translate the standards in the next 2 years. Then if you go to GRI's website, everything is transparent, including the next 2 years of what GRI standards team is going to do. So the next 4 revision, including GRI 304, biodiversity. Obviously, since 2016, there are a lot of impacts on biodiversity, and we feel the need to update the standard as well. So it was scheduled to be delivered by end of 2022. And as of now, if it's have some particular interest to you, because just a little bit time to adjust here is GRI standard, we make it free for as a public good, free for all, but obviously it's not free to produce the standard itself. So if certain standards are of particular interest to you or your organization, and you wanted to sponsor or you wanted to have a particular deal with GRI, please reach out to us. So now I also wanted to talk a little bit about GRI Sector Standard, because this is an important sector standard program. Okay, I'm wrapping up. So Sector Standard basically, we identify about 50-something sectors, including the first 3, oil and gas, core, agriculture, aquaculture, and fishing, the 3 pilot standards, which are already finished, and oil and gas is also already published, right? And at the end of the day, we're gonna, in the coming maybe 10 years, we will create all the sector standards to work as this is the future of the GRI standard system. So basically, there's universal standard, and depends on the industry you operate in, you will find your sector standard. And basically, that would illustrate all the material topics for you to take reference on and compare, right? And then you adopt the relevant topic standard. So this is the future of GRI standard system. And this concludes my session. Thank you.
Thank you, Verna. Yeah, very good explanation about how GRI in response to the climate change. And okay, for anyone, if you would like to raise question, please type it in the question box. For me, I have a question is about the, as far as I know, you mentioned that GRI reporting, there's some on or have already on the climate change. And on the climate change, there's another document, the TCFD, I think you're familiar with. I suppose these are 2 different documents and there are some different requirements. And how would GRI consider to modify, to incorporate all those kind of requirements of TCFD into GRI? Because nowadays somehow as a company to report according to different standards is quite complicated. Therefore, it would be good if there's only one international well acceptable standard. Please.
Okay, so you are talking about an ideal future frameworks that they combine all the standards, or they provide a sole standard, which actually there's appendix here. So basically, EU is currently drafting their corporate sustainability reporting directive. So basically, EU would legislate the sustainability reporting. Up until now, in the past 20 years, it's all voluntary, right? So in the future, if any business operate in EU, you will have to mandatorily adopt the EU standards, right? So GRI would be a co-constructor of the EU sustainability reporting. This is to your question, a little bit about relevant to your question is, in the future, we might have 2 systems, but the system is actually what I mentioned earlier. They could still see my slides, right? Yeah, okay, so here. So basically, the key concept would be double materiality. If you haven't heard about it, you will heard about it a lot. And what you just mentioned, TCFD and GRI, to be honest, it is actually very different perspective. So TCFD, originally it was established, it is an incredibly useful framework. It was created by the Bloomberg Family Office. And then when they published the TCFD framework, GRI's team, we worked directly with them and we provided cross-reference on TCFD and GRI standards. So in fact, if you go to GRI's website, you could find the publications help you, and you could find there's about like 70% of the, or 80% of the indicators are basically similar or the same. So to your question about reporters' burden, you could reduce your burden a lot. But then we need to look at this slide, is TCFD, similar to other frameworks, they are actually talking about financial materiality. So what they are looking at, TCFD looking at its climate change, it's already happened. So TCFD asks the company to assess the risk and the opportunity created because of the climate change. While GRI standard, we are looking at what's your company's impact that cause climate change. So it's actually a different perspective. But you could, there are like indicators like about 70% same. Yeah. So that's my answer.
Okay, thank you.
Thank you.
You mentioned that GRI do not comment on the quality of GRI reports. GRI is a very good disclosure standard, but it doesn't mean that every GRI report are good report. Then how do I know it is an excellent GRI report or poor GRI report?
So you know what? That's why the whole ecosystem existed, right? And everybody is playing their own part. So GRI, as global standard setter, we don't evaluate the report yourself, and we don't endorse either. Because otherwise, because there's certain things we cannot do in order to maintain our neutral position. But then go back to what I mentioned earlier, it's the EU corporate disclosure. In the future, they require assurance. So it's a requirement for you to have your report assured, right? So basically, they actually create a kind of opportunity for this industry, right? So what I'm trying to say is whether it's a good GRI report or not, it's not for GRI to say, but at the end of the day, your investors will know, your customers will know, your stakeholders will know, right? So it comes down to your company itself. If you don't care about the quality of your report, that's fine. But if you do care, and if you are the industry leaders, you want to take the leadership role of the sustainability, then you would produce a genuine GRI standard, because it's all about disclosure and transparency.
Okay.
Yeah.
There's another question is, I believe that GRI has put a significant effort on developing the disclosure standard, but are there any guideline or pathway directing company to set target? Since investors nowadays are expecting more ambitious reduction.
More what? Sorry.
More ambitious reduction. More aggressive reduction.
Aggressive?
Yeah.
Okay. So you mean, so the question is whether GRI would provide some indication.
Are there any guideline or pathway directing company to set target? Yeah, because investors are now they are expecting more aggressive reduction target.
This is actually a very interesting question. So basically, GRI standard is a global standard. So when we are setting the standards, first of all, from the beginning, GRI standard is created using the so-called multi-stakeholder model. That means we have defined 5 constituency groups to help set the standards. We are not just a group of us doing the standards, right? We have experts from civil society, from business, from academic circle to help construct the standards. And then because it's a global standard, so we need to make sure it's universal, adaptable, right? It is applicable to not just listed company, including SMEs or governments. So to your question specifically, the guidelines specifically has to see where is your company operate in, because your company has to operate in some continent, in some capital market, in some region. So you have to go back to your region and your local authorities. So depends on the ambition of your company. Actually, you could for smaller company, you could adopt the guideline from your region authority, right, or from your industry standard, right? You could do that. Or you could compare to your global peers, or you could choose whichever is the most strict one. So that's the answer to your question, actually.
Okay. Maybe, maybe any company, I think the investor would select those companies that set aggressive target.
Yeah, well, but it doesn't mean the more aggressive you set, it's the best, right? Because if you set a target, means you have the commitment to reach the target.
Yeah. Okay.
So again, I think to be honest, because we operate in different continents in region, including Greater China region. So when we are looking at the quality, it's not about your ambition, but about transparency and whether you would actually commit it or not.
Thank you, Verna.
Thank you so much.
Thank you for your effort and time to prepare the presentation for us. Thank you very much. Yeah. Thank you for your time and effort. Yes, thank you.
Thank you all.